So just 9 days ago, this guy right here lost $476,000, and you'll want to know what he does so you don't follow in his footsteps. Also, before I continue, be sure to follow because I break down the stock market and put you guys onto undervalued stocks early. So before these 9 days, this guy's account balance was sitting at around $1.3 million. So he has a lot of money to work with, but now he's sitting around 869,000 after losing 400,000. And what he did is right here. He says, don't short semis on leverage during historical blow-off tops. And if you don't know what that means, I'll explain it to you, but also if you don't know what it means, that's another reason you shouldn't be doing it. So typically what the average Joe does is they buy a stock, wait for it to go up, and then they sell it, and then they make money like that. Shorting is kind of the opposite of that, because when you're shorting, you are borrowing shares and selling them at their current price. What you're hoping for is for that price to drop so you can then buy them back later for cheaper. The worst case scenario for when you buy a stock is that stock drops significantly and you lose a lot of money. But when you short a stock, there is no limit on the amount of money you can lose. That's why those companies that were shorting GameStop lost billions upon billions of dollars. And something that he did right here is he borrowed money that he didn't have. When you are borrowing money that you don't have, that's more money that you can lose, and that is money that you have to owe back to the brokerage. So how can you avoid being in his shoes? Well, first off, you avoid doing what he's doing. Don't short things on leverage. Don't short things in general. Of course, you can if you want to. I'm not a financial advisor, so you can do whatever you want. But personally, honestly, I just wouldn't recommend it. But something you have to remember is when in doubt, you zoom out. When you zoom out, you're able to see the bigger picture here. If you're looking at the semiconductor ETF, you can look at it and you can see that it's going up rapidly. That is something that you do not want to bet against. Another thing, when a market is pulling back drastically and one of the stocks that you're watching is hardly making any movements, that means that there is a lot of demand there and you also don't want to fight that. In that case, it could be worth looking into because that means that there is a lot of buying demand. And also be weary of what you're actually getting yourself into because this guy was shorting semis. There is so much institutional inflow happening on semis right now. And also, it is extremely difficult to know where the exact top or the exact bottom is going to be, because if we knew, then we would all be rich. Something that I would suggest is looking into the trends and seeing which companies solve the larger companies' bottlenecks. But anyways, I'm not a financial advisor, so you could really go do whatever you want, but I just ask that you guys do research on the things that you guys are buying. But if you want to see how our group is beating the market month after month, along with the exact entries and exits of our 7-figure traders, then join our free Discord, link in bio.